Joining us now to talk more about the U.S. economy after those GDP figures were released is Luciano Duque. He is Chief Investment Officer and co-founder of C3 Bullion. Luciano, great having you. Thank you very much. And how significant is the U.S. GDP contraction?
Hi, Diego. Thanks for having me. It is significant. All right, we're seeing a significant change or significant down in the GDP. But that could be also tied up to the fact that everything is being reshored. Okay, people are trying to reinvest into their companies to start producing more. So that reinvestment is going to make sales, decrease. So yes, we have a decrease in the GDP, but my take on it is that we're going to have a bumpy 2025, maybe even 2026. But I think in the long run, it's really good what is happening.
So how much can the U.S. economic contraction in this quarter be attributed to Donald Trump's tariffs?
I would say better this way. We have been seeing a slowdown little by little happening since probably 2023. What the tariff made was made the situation evident, pretty much. Okay, but we have a slowdown that is like in a slow motion happening for the past 2 years, okay, that now is just coming out. And sure enough, the tariffs is making evident, okay, maybe even precipitating what is going on, but I wouldn't attribute directly to it. It's something that is building up.
You touch on an interesting point. You touch on a slow motion slowdown of the economy, but to what extent have Trump's trade policies distorted or affected normal economic activity?
Look, the normal economic activity, I don't know how to put this. There's a disconnect between the real economy and Wall Street. Okay, right now everything is sort of inflated for the easy money policy of the last few years. You have a lot of growth in the stock market, but the main street is not moving as fast. That's why you have lower wages and people complaining about it. Okay, so even though yes, you have a slowdown in the economy, it's been building up from the disconnect between Main Street and Wall Street. Let me give you an example. Okay, last year the S&P 500 gave 25% return, average 25% return. Mm-hmm. So if you have a business, a small business owner, which is pretty much the driver or the main driver of the economy, the one that creates jobs and the whole thing, a good small business could start or could be producing around 20 to 25% profit. So you have a guy that is going there, opening the shop, creating jobs, and they see like a 25% return. On the other side, you have the stock market, which is making 25% return by doing nothing. So you don't have incentive on the real economy to actually drive, and create jobs, create businesses. Why a business owner is going to be opening a shop in the morning and dealing with clients the whole day when he can just sit down and see the stock market, grow up, and that's it. So there's a big disconnect there. Now, if you see on the stock market, they're producing returns of 25%, but the PE ratios are just crazy. So there are no dividends. If you invest, let's say, $100 into a stock market, expecting to have dividends back, you will sit down for probably 30 years to have the $100 back. Okay, so everything is driven by valuations. That's it. So my take is that real economy is not really there, and the tariff, what it's making is make everything evident. And now people need to go back, to start their businesses, to create jobs, to drive that small business that drives the GDP of a country, not simply the stock market.
At the same time, Luciano, this investor who's thinking about starting a small business and getting these returns from the stock market, right, is going to be facing an economy that sees a much contracted government expenditure, right? because
Yes.
DOGE and expenditure cuts are bringing down these figures. How does this operate in this context?
The same thing that happened. The U.S. is very resilient. People are creative. Okay, so my take is people will start creating new businesses, new things. Things that, for example, used to come really cheap from overseas. People will start building stuff in here, and I think that's missing. There was this big disconnect where now everything is being imported cheaper. Okay, so people have more stuff, but at the same time, if you see the job growth, the job pretty much market happens on temporary employees. Okay, not in real businesses that are being created. And that brings me back to the disconnect. We're seeing this disconnect. So what I'm seeing on the GDP going down is a go back to basics. Let's see what's going on here. Why most of the jobs are like temporary? All right, what's going on here? So yes, I see the situation happening with the tariff, but at the same time, that creates opportunities inside the U.S. in order to start building things that probably we forgot how to build it because somebody else was doing it cheaper outside.
You're presenting a positive situation. And what is your take on concerns and the risk of a recession in the U.S. And in the world?
We will have a recession. That's my take. Actually, I was on a meeting on January when everything was starting. I cannot say much about it, but the real consensus in this high-level meeting was that even though all the decisions that are being made might not be popular, but we need it. We are in sort of a situation, imagine that you went on a vacation, okay? For a month, you max out all the credit cards, you went to a party for a month, and now we went back. Now it's time to pay the credit cards, go back to work, and go back to basics. So even though there's concerns, we will have the recession. That's my take on it. It's going to be in some regard that go back to basics. Let's check what's working. I see the Trump's tariff not probably as a tax on the people, but audit opportunity. We need to audit ourselves, audit the economy, and see that we have been sending out everything. We're not making much, and we are just enjoying the profit margin to buy more stuff. And I think it's a necessity that we need to go through this. I think it's normal, actually. Many companies go through restructuring. A new CEO comes in, start firing people. You might have a lot of complaints because people got fired, okay? Maybe the output of the company is going to slow down that first year, but probably what's going to happen is that profit margins are going to be increasing, okay?
But in the long term, it's going to be more positive. I see that. Luciano Duque, thank you very much. We'll have to leave it there this time, but we'll sure continue talking about this. Thank you.